Hello, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host. Appreciate everybody coming in this week and visiting. Well, we've had, I guess now, 6 straight weeks of upward price action in the market. So let's see, 1, 2, 3, 4, 5, 6. So, even though the market is very narrow, which is usually not a good sign, it looks like it wants to go up here and make new highs. So it could still roll over and go lower, but it looks like it wants to make new highs, and there's no disputing that. The interesting thing about this move, though, is you've still got some of these other markets that are really the Dow and S&P look like they want to make new highs, but really almost everything else, and maybe the NASDAQ 100. Let's see, the QQQ. Yeah, the QQQ's already made new highs. But really almost everything else, if you look at the Russell 2000, if I can get it to pull up here, the Russell 2000 is lagging badly. It looks like it's already made its initial move down, and this is just a counter trend. The Wilshire looks a little bit stronger, but still way behind the Dow and S&P. So the market is just very narrow. I mean, you got companies like Google, Amazon, and then a bunch of Dow companies that are moving higher. But literally almost everything else. Well, some commodities are moving a little higher, oils, things like that. But literally everything else is moving down and has moved down quite a bit. So, the market, this is what makes it so hard to predict, which, I agree with what people say, you can't predict the market. But one of the things that makes it so difficult to predict is it never does the same thing twice. Seems like it. Like you could go back and you could study 2007, 2008 and the way that market topped. You could go back and study 2000, 1999, 2000, and look at the way that market topped. You could go back and look at every top, and they look a little different every time, and so it just makes things really difficult to predict. Let's see. Let's go back to the S&P 500. That's the VIX. Let me look at the S&P 500. So it does look like somehow we'll get some new highs out of this. If you look at it on a daily, it looks a little bit more, you can kind of see how it might play out. You might see, we could retest this line and then take off, or we could just take off from here. But it looks to me like we're going to get some new highs out of that, probably into this 2140 area, 2142-ish. I don't think we're going to get significant new highs, but it looks like we might get some new highs. So be prepared for that. If you look at the VIX this week, let me go back to a weekly. So even though the market was up, the VIX was down, but it was not down as much as you would think it would be. At least that I would think it would be. But certainly the VIX has just been chopping around the midline of this channel that I've drawn here. So I've got this channel, and this channel tool will actually put a midline in the middle of the channel. So I just kind of let my eyes fall where it looked like the price action was, and this just happens to be the middle of that. So it looks like maybe we're kind of ripe for some VIX expansion to the upside. We'll just have to see. From the very beginning, I've been harping on this 10-year Treasury, and notice that the 10-year Treasury moved out in a pretty big way. This is a pretty big move for the 10-year Treasury, as was this and this and this. But I think you could actually see this Treasury move higher next week again, to the point where it starts to capture some people's attention, and it could actually make the market a little bit more difficult to make any kind of significant high. Since we're talking about the 10-year Treasury, the dollar kind of coincides with that. Let me show you the U.S. dollar. You can see it took out this week pretty rapidly. This is the upcoming week. This is the past week here. So looks like the dollar's on its way to take out this previous high back here from early March. So expect the dollar to hit that 102, 103 area here in the next few weeks. Let's go back to the profit charts real quick here. We can look at the euro. The euro finally made that move lower. It kind of did it last week. We talked a little bit about it last week, where it had broken out of this little triangle and was going lower. And actually, the price that I have on the chart, well, I think we actually talked about it taking out this low here. So coming down below this line, below this 105 area, eventually here in the next few weeks. Now, after that happens, I think the euro is going to bounce pretty rapidly back up into this 115 area, 116 area. But let's take it one move at a time. I mean, it could break significantly below this 105, or it could just barely break below it. So we'll just have to wait and see where it actually goes to. Let's look at Germany. Germany looks like it wants to at least test the trend line here. Zoom in a little bit on that. So we got this trend line right here that I put under here, and it looks like Germany kind of wants to meander its way back up there and at least test that, maybe make new highs, maybe get up here. I'm suspicious about new highs because I don't know that much about the German market, but our markets are very, very thin. There's no real leadership in the market. I mean, you got like O'Reilly and AutoZone and companies like that, and you've got Google and Amazon and Facebook to a lesser degree. Companies like that are doing really well, but most of the companies in the S&P 500 and in the NASDAQ are actually kind of look lower. So fewer in the NASDAQ, more in the S&P 500 and in the Russell 2000. Anyway, we might see Germany kind of get up under this trend line here. Japan, we've had this box drawn on here a while. It's looking like it wants to run back up into that box. I don't know if it will or not. We'll just have to wait and see. No way to know. United Kingdom kind of found support, looking to bounce here. Might, if you extend this trend line out, might get some testing of the underside of that and then roll over. But certainly, I mean, if you look at this move from March 9th till now and until mid 2014, all of these markets really started slowing dramatically in mid 2014, including our markets. So there really has not been a lot going on in any of these markets for some time. In fact, the last 6 or 7 weeks have been the most exciting time in our market in over a year. And believe me, caught me completely flat-footed. So, as did, I'm sure, a lot of people. In fact, there's always talk about hedge funds and things like that. But this guy Bill Ackman has a big position in a company called Valiant Pharmaceutical. I'm just going to look it up real quick. I don't know the symbol. Valiant. I think that's it. Valiant. No, that is not it. Well, I can't remember the symbol. I wish I could remember it so I could show you guys. There it is right there, Valiant Pharmaceuticals. So Bill Ackman is a real famous hedge fund guy, and he has like 35% of his hedge fund is in this Valiant Pharmaceuticals. And let me get it on a day just to kind of show you how bad this is. This is a daily chart, and let's measure this from high to low. He's still in this, by the way. It was at around near 300 and went down as low as $73. That is a 72% loss in value, and something like 35% of his hedge fund is in this stock here. So talking about getting caught flat-footed, I mean, that is really bad. I mean, his whole fund is down almost 20%. So, don't think that these guys just walk on water and they can tell the future and all that stuff. These guys are no different than, I mean, they're subject to the same kinds of mistakes that me and you are. And it doesn't matter what people think. It only matters what the market is telling you. And this market move here caught Bill Ackman and other people, not just him, way off guard. So I just thought that was a little anecdotal thing that's been going on in the market that might. And if you want to know more about that, just search under Bill Ackman. There's plenty of news about it. Let's look at the Dow Jones Industrial Average. It's been very strong as well. Now, that could be bad or good, and I'll explain what I mean. A lot of times when the market gets starts getting defensive, in other words, some of these funds like Valiant Pharmaceuticals or things that people have money in, when they start going south, a lot of times money will move into the Dow 30 stocks like Honeywell and IBM and Walmart and Coca-Cola and McDonald's and all these companies, because they're so big, it's a pretty decent place to park money. And a lot of times that will drive something like the Dow 30 higher than something like the Russell 2000. If we go back to the Russell 2000, you can just see. I'll tell you what, let's do this. Let's put it on a 2-year, and we'll put the Russell. We'll put the Dow on the left scale. So that's $INDU. So you can see here. How much stronger the Dow is. The Dow's in blue here, and the Russell's in black. And you can see this gap here that exists between these two indexes. And really, ever since the September low back here, the Dow has been growing more rapidly than the Russell. And like I said, a lot of that is because once you have a big sell-off like we had back in September, money gets defensive and it starts pouring out of stocks that were in the Russell, stocks in the Russell 2000, and it starts parking that money in things like the Dow. So your IBMs of the world and your McDonald's and Walmart and big Honeywell and big companies like that. That's where those monies are flowing to. And also you can look at the global Dow. The global Dow, tells a different story too. This is, and I don't know that much about this index, but it is a global type of measurement, an index. And what's interesting about this, I think, is the fact that you've got, let me zoom in on this and try that again. You've got this downtrend here, and we're still pretty much below it. And I think that for the global economies, the global markets, I think that, we're looking right at a point where, traders would naturally start looking for trades in this direction. Now, I don't know what stocks make up this global Dow, but it's supposed to be some sort of representation of the global stock market. All right, let's look at the DAX on the weekly. So you can see the DAX had this little sell-off here and then ran up, and then it's got this bigger pullback, and it remains to be seen whether the DAX is going to run up into these areas here. Let me draw that decision point on there. So, can the DAX run up into that, 13,000 area? Who knows? I don't think so, because this is going to take many, many more weeks. This is probably 6 months worth of price action. In fact, if it did move up, I think you would see it do something like this first, pull down, and then up, and then down, and then up, down, and then up like that. So, but who knows? This could meander its way up there over the next 6 months or so. But to me, this looks like the last run up, because you've got a pretty meandering kind of a trend happening here, and then you had a good pullback, and then you had this last gasp run up. So to me, this looks like this is probably sell off, but it's right in the middle, where it could be sell off, or it could just be a larger pullback on its way to higher highs. If we look at the FTSE, this is the FTSE 100. This is the British market. The same kind of thing. It's hard to see where this pullback was. Maybe here, and then this was the last run up, and then you've had this sell off here, and this looks a lot weaker, this latest move here. So I would say the FTSE, it could make it up into this area, but this looks like maybe the last move, and this looks corrective, and this looks in like maybe the direction of the new trend. Who knows though? This whole thing could be a topping pattern. It's hard to say, but this looks weaker than stronger to me. So we'll just have to keep an eye on these things and see how they turn out. Oil, we've been talking about this decision area here for a long time. This is a weekly chart of oil, and so I expect sometime over the next 3 to 6 months, you're going to see oil kind of meander its way up here like so. Is my guess. Now it could actually go lower first and then meander its way up there, but I think the best way to approach that, if you're looking at investing in oil stocks, is just kind of think of this area right here. Let me get to it. This area right here as a congestion zone, and maybe you don't do anything unless it either breaks out this way or breaks out this way. That's a good way to approach something like oil. Like say you wanted to buy, you're really hot to trot on ConocoPhillips or Chevron or ExxonMobil or somebody like that. If you want to buy ExxonMobil, you might want to wait and see if oil breaks out of this consolidation here to the upside and then buy ExxonMobil. Or if you're looking to short something, you might want to wait till oil breaks down through this congestion zone this way, and then look to short the individual issues in that list of stocks. Let's see what else we have here. We've got look at the ES, which is the S&P 500. You can see on the futures we're very, very close to a new high here. In fact, if I just ignore that, that's my dog. If I get a DP off of this, you can see here that we're probably 2 or 3 weeks from a new high. If we get a new high, which I think we probably will. It may not go this high though. It may just be a slight new high and then pull back. But we could get a little bit of a pullback first, because what I'm looking at here, one of the things that has me kind of confused here a little bit is we've got, you got this move here. So there's a pivot, and then you have all this up. Well, if this is corrective, this looks great, and the next move is down. But if this is in the direction of the trend, and we're going to make new highs, then we should have some sort of pullback that looks like this, and then a move up. So I'm looking for either this or this plus that. And boy, I don't know. I tell you, I've been wrong on this move here, because I really thought that we'd get a move up into this area. There was a gap. I remember looking at a gap around here, somewhere in this, where these red dots are, a while back, and I was expecting the market to start rolling over at that point and going lower. So I've been pretty wrong on this move. This is normally, I can just talk to you about normally, and what does that really mean when you're talking about the stock market. But normally when you get a move like we had here in August, this is usually like the first move of a trend change. So this is like the first move down, and then you're looking for a corrective move up, because you just don't get violent moves like this and then have the market go to new highs. I mean, that's just very, very, very unusual. So, when I look at all this area right here was signaling to me this is a trend change. And so I'm looking for, okay, a move down, but then some sort of corrective, just like we had, like right about into this green box area, and then boom, down. And boy, did that have me fooled. I mean, we got this little pullback, looked like we were going to go, and then bam, we rifled up to the upside and just kept on bouncing higher to the upside. And now we're at, the interesting thing now is there's a lot of resistance here, but the market doesn't seem to be too resistant to it, to use that term. Notice how this triangle, this consolidation pattern, the meat of it kind of lines up with where we are right here in the S&P 500. Usually this much of a congestion zone, and really it's even bigger than what I've got it drawn. It goes even further back here, but usually this large of a congestion zone all through here will grind a trend. Whoops. I don't know why that was doing that. It wouldn't let go. It will grind a trend like this to a complete halt and reverse it and make it go the other way. So make it go that way. So I've been very surprised that this has been able to chew through all of this as quickly as it has and easily as it has without any kind of a pullback. I guess that's the world, that's the investing world according to the Fed. You've got a lot of people's expectations around, will the Fed hike rates? Will they not? It's not so much the one rate hike. It's normally when the Fed starts to lower rates or raise rates, it does so in a continuation manner. So once they start raising rates, they usually continue to raise rates until the economy tells them, no, don't raise the rates anymore. Or in the opposite direction, they'll lower rates until they either can't lower them anymore, or the market takes off, the economy takes off, and they can quit lowering rates. The interesting thing, though, notice that the market isn't waiting on the Fed. I mean, the market rates are going up now, even though the Fed hasn't really done anything yet. So, and you could look at shorter term treasuries. It's the same thing. Shorter term treasuries are taking off as well, even though the Fed hasn't raised anything. So really, if you really analyze what the Fed does, the Fed follows rates. It really doesn't raise them. they talk about it in exactly the opposite way. They talk about it like the Fed raises rates and then the market responds, but it's really the other way around. The market does its thing and then the Fed responds. But I don't want to get into that too much there. That's getting a little bit into the weeds. So let's see. One thing I didn't look at. Let's look at real quick is gold. Let's go back to the gold and silver. Both are having a little bit of a tough time of it. You see, gold has retested this zone down here that we had left on the chart, and I didn't bother creating a new one because I thought maybe we were coming out of this. But actually, what we should do is create another yellow box down below. Well, we've got one here. Here's one right here. So you could see gold kind of come into this area and then bounce. It looked like it was going to bounce way back here, but notice this this double. I kind of created a channel here. I don't know if you can see it. I'll put a red bar there, and red bar here. This channel kind of represents an area that I was wanting to see gold break out of before getting involved in a gold trade. And you can see we got up into it, came back, got up into it, came back, and then fell off. So we're not in that channel yet. So we might be looking, gold might be kind of meandering its way down into here, and then we're going to get out of this channel. We get something like this, and then a pull back to it, and then this would be where you would want to enter. So we'll kind of keep an eye out for that. I think silver is a little stronger. If you look at silver, it's SI. It doesn't look stronger here, but it's actually, I don't think silver's likely to pull back into this area here. We can draw a box there, but I don't think we're likely to see silver pull back that far. Let's draw a box right. Whoops. Well, shoot. Sorry about that. Lost my. So let me do this. Do this. Let me scrunch it a little bit. Now I'll get my box. So we might see silver pull back into that. I don't think so, but it certainly could. It looks like it wants to now. It's just going down, 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 and we got the MACDs kind of rolling over here. So who knows? Maybe silver drops down into a lower low too and then takes off. Just have to watch and see. I still think anywhere in here is a great time to buy silver. Ultimately, I think silver, I think I've spoken about this before. Ultimately, I think silver will actually go lower than these prices here, maybe as low as $8, $7 or $8. The thing I worry about is being able to actually buy it at those levels. Either the premiums will be real high, like the commissions, or you just won't be able to find any because people have already bought up a bunch of silver and nobody's producing it because the prices are too low and so on and so forth. So there's some things like that you have to take into consideration when you're buying precious metals. You can't just hold out for the absolute lowest price and be sure that you're going to get it because you might not. You just might not get that price. Trying to think if there's anything else that we haven't talked about. I think there's talk about China in a new bull market because it's up 20% off the lows. Does that look like a new bull market to you? It doesn't to me. I don't know what they're talking about. Certainly you could enter China for a trade. But clearly this is down and this is very overlapping. So one of the ways you can kind of tell the difference between the dominant trend and corrective trends, see how overlapping this is? So it's just overlap. that's usually a sign of a corrective type trend. In fact, one of the things you can do is you can go real early on. So let's pretend like this is what we're looking at. Okay, you can take this high and this high, and you can make a channel here. So take this high and this, just like this, and make a channel here. And then when you see price action accelerate out of that channel, see how it accelerated out of this channel right here? This is no longer, this is telling you that this now is the direction of the dominant trend. It's got the same kind of, if you look at this right here, it's the same kind of effect, although there's not as much data here, so I don't know that you can count on it the same way, but whoops. Same thing here. This is kind of what's got me a little bit worried here. A logical place for this to reverse, if this wasn't the dominant trend, would be right where I said earlier, right around this green box. And then you would expect the market to do this, right? But notice it accelerated out of this channel and went higher. So really right in this area right here, you can, if you're short, you got to say, well, I'm gonna have to give that up because I'm breaking out and I'm likely going now to this area here. So I realize that's a big channel, and normally you don't have to wait for some huge channel like that to tell you that. But this just, to me, that I've never seen this kind of sell-off without this being in the direction of the trend. So that's the first time for everything. The market can do anything. That's the thing you always have to be prepared for. When you hear people on TV say, "Oh, the market could never do that," don't believe them, because it absolutely can do it. And if you don't have respect for that, it'll catch you at the worst possible moment. All right, everybody, that is it for this week. Don't forget to take this, copy, and then email to your friends and family. It doesn't cost them anything. Promote it, edify it. If you see value in it. I mean, if you don't see any value in this, then don't do that. But if you do, send the link to other people. The market's been really tough the last year and a half. I think it'll get to a point here pretty soon where it's going to be a little bit more easy to predict the direction, the ebbs and flows of the market. And I think we're very close to that point. I mean, we'll probably make a new high, and then it'll start moving in a way that is a little bit easier to predict and a little bit easier to fluctuate in and out of. So anyway, that's it for this week, everybody. Thanks for coming in, and hope to have you visit next week for next week's Middle Class Investor. Take care, everybody. Bye-bye.